John, good to chat with you. What of the SunPower bankruptcy is endemic versus idiosyncratic?
Well, thanks for having me, Alex. It is idiosyncratic, or certainly there were specific issues with SunPower that, in terms of it's no secret they had struggles with some of the accounting. I think the auditor resignation certainly kicked all this off. So a lot of what SunPower struggled with, troubled acquisitions and so forth, are really one-off. The equities in terms of the broader sector, including Sunnova's equity, has certainly been under pressure for the last few years. It is something that I think that as we look forward in the business, interest rate environment's definitely gotten more benign. I mean, the rate drop that we've seen over just the last few days has been tremendous. I think there's been some backup here today and some what I think is profit taking. But nonetheless, year over year, we're now starting to see not only rates sideways, but actually rates in some cases, depending on where you are on the curve, actually have dropped materially, right? So in terms of interest rates, that's not really a factor. We've all adjusted our pricing to accommodate for that. Utilities have pushed up pricing tremendously because of interest rates, amongst many things that also drive their rate structure.
Yeah.
And when you look at it quite simply, utility rates have gone up. Solar equipment, panels, batteries have crashed downwards, and that opens up a huge wedge for value for consumers. So business overall, as we said last week in earnings, is actually really good at this point. And some demise of some competitors, you can imagine that business has to go someplace.
Well, I was going to say, John, are you picking up market share? Who's calling you right now over the last 24 hours?
Well, we have seen a surge in business, as we said last week on our earnings call, that was pretty tremendous. I frankly have never seen anything like it and been in the business for a number of years. Was that in part due to SunPower's failure? They had announced the shut operations a couple of weeks or so ago. I mean, yes, some of that was. But again, we're also seeing the storm season is very active. Houston took a direct hit, as everybody knows, as an example of that. And so what we're seeing is utility reliability is dropping as well. So we're seeing a lot of consumer interest in coming in, saving on utility bills. There's been a lot more press about a ratepayer revolt starting in California, with those California rates jumping 85+% just in the last 3 or 4 years alone. And so you're seeing a lot of interest from consumers that's growing, despite what is, yes, higher rates than 3 years ago, but they're not that much higher. And utility rates, though, are much higher. So that's really what we feel like in terms of higher utility rates, lower utility reliability, is really giving consumers the first choice or only choice they have against the utilities, and that's driving a considerable amount of demand. As we go into a slower economy, you have to pay the power bill no matter what. And if it's cheaper with Sunnova or one of our competitors, you can imagine more people are seeking that cheap alternative out on that bill that they must pay.
What's the uptake, though, now, right, John? When we talk about new customers, those folks that haven't already adopted solar, I mean, what's the change in uptake versus, say, I don't know, a couple of years ago?
Well, we actually last week announced that we were stopping new dealers, at least for pausing, if you will, for a while. We'd never done that as a company because we'd seen such tremendous demand. And I think that'll level set itself out, and over a period of time, you have competition in a market, which is what we need. Consumers need that competition to the monopolies, to the utilities. But when you look at the cheaper and better equipment that's coming out at a rapid fashion from a lot of different suppliers, including folks like Enphase, SolarEdge, Tesla, and Generac, and so forth, there's a lot of new capabilities of managing load, of those solar panels do very well going through hurricanes even, and batteries do a great job. In many cases, we saw that even much better than generators through hurricanes here in Houston. So all of these attributes, again, utilities getting less reliable, more expensive, but the equipment's getting more reliable and more capable, and being able to deliver that kilowatt hour to that customer when they need it, when they want it, at a cheaper price.
I'm curious about your own internal goings-on here, John. When we talk about your earnings report last week, and you saw the big pop in the stock the day after, a lot of that seemed to be because investors were pleased with some of the commentary on cash generation. The idea that there has been, I don't know if we call it a shift to strategy, correct me if I'm wrong, but there is certainly a much more vocal focus on cash generation. Why?
Simply put, when you look at the capital markets became very difficult when rates did move up in the worst bond market in U.S. history, which even eclipsed the Civil War, which I thought was fairly noteworthy. But there's been a lot of focus on debt and debt servicing and ability to repay and so forth. And we made it very clear we don't take out debt that we don't believe that we can repay. And we had a plan here to generate the cash on a forward basis when we took out that debt a couple of years ago. We got plenty of runway on the corporate debt in terms of time. And our commitment was to investors was, hey, we're going to stockpile cash if we're not really being priced for growth, even though we're seeing plenty of growth, more growth than we can handle, as I just mentioned. But we're going to stockpile cash, and then we're going to go after the debt, pay the debt. That's the plan. And It's pretty simple and cut and dry. And that's what I think investors really appreciated.
Hey, John, before I let you go, let's talk politics for a second. So California is sort of paring back some of its subsidies for residential solar. And that's California. If we get a President Trump in the White House, what is your confidence level that the IRA and all the solar subsidies stay?
Well, those are two separate things, Alex. I mean, one, in California, I wouldn't call what they call net metering, especially now with batteries, as a subsidy. Really, there's a lot of value that having all these solar systems and batteries and load management spread across the state of California behind the meter can really add value to the system, and there's a lot of value there. The problem is the utilities just have the governor's office and the Public Utility Commission really by the with a stranglehold and trying to just continue to drive up rates. Simply look again at the ratepayer revolt and the rates that are being driven up since they so-called got rid of net metering. So that's one issue on the political side. We are looking for open markets. Candidly, like Texas, has been much more of an open market for us, and we've seen a lot more growth there. On the other side, the IRA, look, I think this is a bipartisan, bill at the end of the day. It's working in terms of driving manufacturing and creating U.S. jobs here. And I don't think that no matter who gets in the White House is really going to roll that back because it's been so successful. The other thing is you looked at the weak jobs report, which really took the market for a tailspin, as we all know, over the last couple of days. The last thing I think that whoever wins the presidency is going to want to do is do something that actually drops or degrades or lessens job growth and maybe even it leads to more layoffs. I just don't think that's good public policy, regardless of whether a Democrat or Republican. And candidly, this is an industry in terms of the new energy industry that we need to own as a country, and there's bipartisan support for that as well. So I think that we're largely speaking a lot of politics, and at the end of the day, I think the IRA is going to be largely intact, regardless of who wins the White House here in 90 days or so.